Good afternoon. Welcome to our webinar on cost transparency. As one of the leading regulatory reporting service providers, acarda aims in providing asset managers with the latest software platform for different regulatory reporting. With several years of experience in the field of regulatory reporting and robust system, we help our clients accomplish their regulatory reporting goals in an effective way. Today, we are going to discuss Cost Transparency Initiative. Our discussion will follow the latest market trend, the idea and rationale behind the Cost Transparency Initiative, how asset managers can report cost through the various value-driven templates, and what are the next steps that the industry will be performing under the umbrella of the CTI. In addition to this, for the purpose of emphasizing on data management, we will also discuss how cost and data fields from PREPS, MiFID, DCP reporting could be translated for CTI reporting. Before moving forward, for the purpose of this webinar, let us introduce ourselves. I am Khaled Al-Mahaini. I am a product manager at acarda for regulatory compliance platform for PREPS, MiFID, DCPT, and Cost Transparency Initiative for both asset managers and insurers. And today I will try to answer questions from asset managers and the existing and upcoming cost disclosure in the market.
Hi, my name is Juliet Young. I am an implementation specialist at acarda. I have been helping our clients to collect and report costs and charges disclosures. Khaled, can you explain us how the whole arena of cost transparency measurement and reporting was set up?
Yes, Juliet, thank you. So before we discuss the Cost Transparency Initiative, it is relevant to outline the key factors that gave birth to such guidelines. The market is faced with an increasing need for a comprehensive cost and charges disclosure, requires a framework that is value-driven and transparent. Therefore, we see that industry-wide acceptance towards standardization and pull effect from the institutional investors creates an increasing demand for cost and charges disclosure under the CTI templates, shifting trends towards more granular and detailed cost and charges disclosure that were already being reflected through European PREPS template, European MiFID template, and the UK DC Workplace template.
Well, I would agree with you. In fact, the market study published by FCA in 2017 outlined the difficulty in getting value-driven cost information. Following that, the PS 1720 issued by the FCA was used to govern the rules required for cost and charges disclosure for defined contribution workplace pension schemes. The Cost Transparency Initiative was launched in November 2018, which is a partnership between the Pension and Lifetime Savings Association, the Investment Association, and the Local Government Pension Scheme Advisory Board. These organizations representing different interests within the pension industry have worked together to increase understanding and awareness in the market to encourage transparency for institutional investors and pension trustees.
And Juliet, what were the implications of this partnership?
Well, the partnership of these three bodies have been instrumental in formulating a mechanism that is value-driven. This would require comprehensive templates to collect data and disclose costs and charges. It would help in establishing a reporting framework that holds the trustees to maintain such templates. It is also standardizing the practice across the whole industry, which will subsequently enhance transparency. As a result, in October 2019, industry-wide adoption of the template for disclosure of the charges and costs was implemented. Therefore, I firmly believe that the asset managers should have a good understanding of the cost transparency under the CTI framework.
I would add that with the DC Works pension schema framework, asset managers are equipped with a fundamental knowledge to collect costs and charges information. CTI, on the other, is much more comprehensive, and therefore the focal point of our discussion today is to explain the different templates that come under the umbrella of CTI. Juliet, could you please explain the templates and the relevant data fields that are linked to these templates?
Of course. CTI templates are developed as a standard framework for reporting costs and charges. This appears to be a point of discussion with our clients regarding what is CTI, its templates, and moreover ICT. People often get confused by these two terminologies. First, let's discuss what are the different templates under CTI. The first template is called main account template, which is the main cost disclosure template to be completed by the asset managers. It covers the majority of assets and product types. Second template is called the user summary, which is used by pension fund schemes and their advisors to provide a summary of key information across all investments. Third is the private equity subtemplate, which is to be completed by investment managers of the private equity funds. The CTI scope not only includes funds, but also segregated accounts that are required by institutional investors. These templates under the framework are populated annually on share class level. Now, let's go to the explanation what ICT is. ICT, or Institutional Cost Template, is the machine-readable template, which means that providers of data can ensure that fields are consistent and compatible across different internal systems, and data can be easily extracted and processed. ICT can collect data in one place from other subtemplates for specific asset classes such as private equity. Asset managers or relevant service providers such as us, acarda, are required to produce ICT template. The main account template with both formats, PDF and Excel, is a different format which builds on the ICT machine-readable format, but still reports data with high level of granularity based on asset types.
All right. And what are the different costs and charges heads? Could you explain the classification?
Yes. The information on costs and charges differs from category to category. These include total transaction cost, total ongoing charges, total incidental costs, and total landing and borrowing costs.
Besides the classification, are the templates further broken down into subcategories or sections?
Indeed, the ICT template contains 10 sections, which reflects on what information is provided from an investment manager to the asset owners.
Yeah, I think it would be helpful if we get briefly more information about that.
Sure. Let's walk through these sections. The first section is aimed at providing the account information. This involves general information identifying the relevant investment accounts. Second is the portfolio investment activity, and this really drives context to the costs that are being reported. Next is the portfolio transaction cost related to the trading activity. The transaction costs are broken down into asset types and are reflected by costs such as explicit transaction cost, implicit transaction cost, indirect transaction costs, and anti-dilution costs. Next, the fourth part covers ongoing charges. Then we have the incidental costs, lending and borrowing costs. Seventh part, the costs related to property. Part 8 captures one-off costs, such as entry, exit cost, or FX costs within the pooled vehicle. Part 9, again, drives context to all these costs, which it provides you information on gross return, net return during the period. And finally, Part 10 includes stock landing information.
Yeah, the ICT template has really a lot of information. Are all these information useful for other CTI templates?
Very true. The ICT template has a lot of fields, precisely 200 fields. They are the basis into the population of other subsequent CTI templates. The second template, for example, which is the user summary, has high-level overview of key information. It is an illustration of the type of costs and charges that you will receive from your asset manager. The user summary also contains additional information, including asset values, sales, purchases, and performance figures. It can be used by pension schemes and their advisors. We can walk through this template, this user summary, which contains 7 sections, and in the end, plus the client return information. If we recall, the aim of the user summary is to report cost and related information from client perspective. It is pertinent to mention that we have to report the costs by assessing the value for money for the client. Part 1 and 2 have the same layout as main account template, which are the account information and portfolio investment activity. Part 3 displays the portfolio transaction cost, but only on the highest level. Part 4 provides information on the ongoing charges at a high level.
I see. So what you are saying is that the user summary has 7 parts that require information on the cost and portfolio, while the main account template contains information on the investment operations. Can you provide an example of such information?
Let's consider the main account template. We are showing the ongoing charges under distribution, communication, and client services, which are computed by 3 underlying charges: distribution costs, communication materials, and the other distribution charges. However, in the user summary template, we only capture the total figure of the ongoing charges. Next part shows the incidental cost, which is the total figure of this cost. Part 6 is the reporting of the total figure on one-off costs. Part 7 is reporting the total figure on auxiliary service charges. In the end, the user summary template requires to show the client return. So the user template is designated to show the cost and value which concerns a client who invests into a fund. A lot of granular costs and charges are consolidated in it.
Okay, so to summarize, the asset manager will produce the ICT main account template only upon requests from their clients. Either the user summary or the private equity template should be produced.
I agree. The templates have been created keeping the granular effect of costs and charges that reflect true value to the investor. Since we have many years of experience in producing EPT, EMT, and DCPT, and managing raw data, we have the optimal solution to produce CTI templates. Let's go back to our discussion on the templates. The third template, which is a private equity subtemplate, is a cost disclosure template to be completed by asset managers of private equity funds. The information provided in the private equity subtemplate may be used to populate the account template, or it may be used as a standalone template. Where appropriate, pension schemes may also wish to use this template in relation to private debt investments.
Okay, can you provide some more information on the third segment of the CTI template? Perhaps we can dig deep into the data fields of the template and what information do they really seek to provide? Because asset classes in DCP or perhaps MiFID II have been reported in a single template. How different is the CTI framework in this regard?
Sure. Let's recall the CTI templates aim to capture most asset classes, including alternative investment classes. This makes perfect sense to have an independent template on equity, private equity investment vehicles. The private equity subtemplate is divided into 6 parts with an addition of the return information in the fund. Let's walk through. You can see part 1 and part 2 reflect the account information and portfolio investment activity. Third part is the cost section. Here, we are not using transaction cost terminology, but the costs which are proper to private equity investments like offset fees and rebates. Part 4 covers fees paid to the third parties. Part 5 captures the performance information of the fund. Part 6 captures the carried interest accruals information. At the end, the private equity template requires to show the gross and net return information. To glance back to the CTI templates, please keep in mind the cost information is at a client interest, who is interested to see what are the costs in the portfolio he invests into, what are the investment activities the portfolio he invests into, and what are the returns he gets back at the end of the period. So we understand really well that templates are issued by the regulator to disclose cost and the value of the funds to its clients.
Adding on, it would be mindful to suggest that we at acarda are fully capable of managing such complex tasks. Acarda Software Service, ARIP, offers a standardized solution for asset management, fund administration, insurance companies, and banks. Since 2015, several regulations that have been put in place require a disclosure of additional product information by insurers, asset managers, and distributors. acarda, as one of the leading full-service providers in the regulatory domain, has supported around 50 of the biggest asset managers and insurers from the United Kingdom, France, Germany, Austria, and Luxembourg. It has helped them in the implementation of their AFMD, Solvency II, PERPS, MiFID II, DCPT, and all transaction cost-related projects. Having a platform which manages over 25,000 ISINs with more than 150,000 reports per year, and for a wide range of services provided, AREP provides our clients with the opportunity to opt in all new upcoming products. One of them is the ICT, which has to be produced by asset managers, and they have to report it starting from January this year. Being able to complete the chain by consuming raw data flexibly from our clients, checking the data, using third-party market data, do complex calculation, generate the required reports via powerful dashboard, and last but not least, to distribute and disseminate your report to website, SFTP, or to target emails, all gave our clients the possibility to overcome lots of challenges in the market.
Thank you, Khaled. You have mentioned PRIPS, MiFID, and DCP, and the asset classes defined in them. There must be some synergies with the CTI if the asset manager is already generating the EPT, EMT, or DCPT?
Well, under the DCP funds, asset managers providing costs and charges information since 2018. The objective behind this framework was also directed towards transparency. This included aggregation of costs. However, we should note that the major portion of costs covered were from prior regulation like PRIPS and MiFID. For example, the implicit transaction costs captured in the CTI templates employ the slippage cost methodology, which is in line with the PRIPS and MiFID, which are the industry standard for transparency in the European market.
Right. Perhaps you can tell us more from data collection point of view. And what is the similarity in terms of data fields?
Yeah, sure. As you explained the CTI fields previously, the CTI templates are much more versatile and granular. Nevertheless, other regulations have had data fields as a focal points of reporting. For example, costs and charges disclosures initiated with 27 fields in the EPTs and 21 data fields in the EMT. Under the DCPT, asset managers have 8 fields to provide cost information, whereas in the ICT, which is the one of the CTI templates, asset managers have to provide information for 82 fields, considering that the asset managers have to disclose all related transaction costs fields per asset class. Therefore, you can imagine the level of information that CTI aims at providing. The level of granularity has been a major discussion point under the CTI framework. For instance, we have witnessed that the lending borrowing costs was first introduced in the DCPT, and now for both the third version of EMT and the ICT have it. For instance, EMT has 2 fields, while ICT has 10 fields to provide such information. Moreover, the template covers transaction taxes, brokerage fees, exchange fees, settlement fees, clearing fees, and transaction service costs. Okay, so moving to the talking about some challenges and some solutions. What are the solutions for these challenges? So let's talk about the challenges that an asset manager can face in producing the CTI templates for its clients. Some of the challenges we have observed from our experience were, number one, for instance, in terms of data collection. Second is transaction cost calculation and the methodology involved. Third is providing meaningful data to the trustees. Fourth is the consistency of data reporting. Fifth being the lack of expertise in managing such data and error-free reporting. And lastly, the distribution of such information to the relevant authorities. We will now deep dive into the challenges and discuss the solution available to address them. So, the first challenge that could faced by asset managers is how to collect the raw data. Asset managers can have different set of raw data that is being sourced from different teams. Often at times, not all asset managers have data systems that are consolidated and they need to liaise with various teams and explain what is required in the template.
That is very, very true, Khaled. Data collection or data consolidation is and has always been a challenge in the fund industry. At acarda, we have experienced this throughout the years. As you would agree that in order to have a correct output, asset managers need correct input. That's why we have automated the data collection process through the acarda master template, or the AMT, which is a standard master template we designed to collect data. It is designed in a way to cover a large range of data requirements. Optionally, in case our clients choose not to provide the data using AMT format, we also have the ability to establish a stable version of file mapping in order to achieve successful client data import into REP. And of course, once the data is provided, we also ensure the data quality by conducting a series of checks in place, because we understand that data collection is the first step towards producing reports.
Thank you, Juliet. So let's talk about the second challenge, which is the calculation of the transaction cost. For other regulations, there are provision of calculating transaction costs through benchmarking, like in PREPS, for instance. New PREPS methodology, the basis points methodology, gives room to asset managers till end of 2021 to calculate transaction costs for instruments that are difficult to price. However, under the CTI framework, slippage mechanism for cost calculation is the primary determinant for the implicit cost effect. We've seen that the industry is on the track of pursuing renowned market data sources for this purpose to get arrival prices of the trade. The price is compared with the trade execution price. Therefore, it is necessary that the adequate measures are taken to get the appropriate market price to evaluate the transaction cost. In fact, we at acarda thought one step ahead in providing a waterfall solution for market data sourcing, where clients are provided with the option to source data from different vendors in a panel of best effort basis. Having more than one market data provider for arrival prices like Bloomberg, ICE, IHS Market, Refinitiv, and the others is something could have a great value to disclose adequate cost figures. The next challenge is that the cost data provided by the asset managers should be usable by the trustees. Any type of information that does not make sense to the trustees would be a waste of effort for the asset managers. Many asset managers outside the UK are used to their local templates. Therefore, due to the multivariate formats, there should be some sort of flexibility. The CTI templates present a solution towards standardization. However, the different ways and formats in which data is accumulated presents a challenge. For this purpose, the effective management of data delivery is necessary.
I couldn't be more in agreement with you. So we assure that the data delivery to the trustee is the product of the data requirement from the asset managers. Different parameters of the regulations and their framework are carefully examined. Then the platform is designed in a way that it's effectively translating raw data into meaningful reports as per the framework requirements. These requirements are reflected in the AMT, acarda master template. For example, the AMT requires the static data on the share class. This is the data feed. We require data such as share class ID, share class currency, share class name, etc. These data points are commonly reported in several reporting standards as EPT, EMT, CEPT, and of course, as well as in the CTI. Our AMT also has evolved together with the reporting regulations. We have added more data points into the newest version of AMT, always aiming to cope with maximum reporting requirements. The platform responds by using algorithm that sources necessary data from the AMT and creates meaningful reports according to the respective regulations and guidelines.
Another challenge we are often faced is the asset classification. Can you tell us how do you cope with such challenges?
Asset classification. CTI has issued 10 asset types, which aims to include all the possible investment activity within the fund. Let's recall that DCPT has 7 asset types and PRIPS has 19 asset types. With the CTI asset type standard, we are facing with more granular definition of asset types. The question is again, how to classify the assets to fit into CTI standards. While doing that, we should still stay consistent with PRIPS and DCPT approach. This makes sense from the cost transparency journey point of view. We are helping our clients, the asset managers, to implement the asset classification by analyzing each security and its attributes. In a lot of cases where it's not clear how to classify one or some assets, for that, we're in contact with the industry to get a common understanding of asset classification. For example, how to define the MMI, money market instrument, which is a CTI instrument type. And as per the framework definition, what is the definition of MMI? In every implementation, we do the exercise of asset classification, which aims to map all the client internal instrument types to the standard CTI asset types. We will use the logic of mapping already in our system when we generate PRIPS and DCP and enhance the mapping to match CTI standards. You can see, in fact, we have upgraded one existing client of acarda, one of the biggest asset managers in the UK, to our newest AMT version in order to produce the CTI for this asset manager. All through this implementation, we successfully classified the instrument types using CTI framework definition, and of course, implemented how costs and charges should be calculated and reported. To put all this into simple words, in a fund, if a fund invests into equities, CTI framework seeks to disclose the transaction cost breakdown into equities. Or if a fund only invests into forwards, it discloses the transaction cost breakdown into forwards. Our platform AREP has the ability to report such costs which are coherent with the investment activity inside the portfolio.
Thanks, Juliet. Another challenge is that the asset managers have to provide complete information that should be checked for correctness. The validity of the reports on all the data plays an important role in the effectiveness of the CTI framework. Perhaps you can explain us how do you counter this?
Sure, Khaled. Error-free and consistent reporting comes from in-depth knowledge and experience of the product. There are costs that are more complex to determine, like the ones that are linked to the funds or the mandate strategy. Surely you do need to be educated in such standard, something with us, acarda. We have the expertise. We've spent a lot of time working in partnership with the asset managers to ensure accuracy of the data. Moreover, our system, AREP, is highly secure that minimizes any data breach and includes effective process for audit trials. Of course, when we talk about data, we need to care about the data quality. Therefore, we have implemented different level of checks, technical checks, as well as business checks to ensure that we do not collect any wrong data, which would block further steps in the process. Data qualification checks are performed at every step in AREP, from input to output.
That makes sense. And what do you think? What about distribution and the format? Would you see this as a challenge as well?
Oh, indeed, a big challenge. To generate the reports from ICT module in AREP, we have the functionality to generate a CSV ICT report, which is the machine readable format. Users then have the option to select one or several subsequent CTI templates to generate. Remember, the main account, user summary, and private equity templates. With AREP dashboards, the users can download and extract reports. Users can also monitor the status of the report generation. And finally, at the end of the process, we design the distribution model. We can distribute the reports automatically via FTP or email. This module is also used to distribute EMT, EPT, CEPT to our clients.
Thanks, Juliet, for this valuable information. So, to summarize, we talked today about CTI and how it came into being. Then we discussed the different templates are a part of the framework. Next, we discussed the different cost hits and data fields. We also informed on how data from EPT, EMTs, and DCPTs can be channelized into making some fields in the CTI templates. And finally, we highlighted the prevailing challenges that asset managers could face in producing CTI templates and the offered solution to them. Considering the partnership between LGPS, PLSA, and the IA aims for cost, transparency, and standardization, sooner or later, CTI will be an industry-wide benchmark for cost transparency in the UK market. Our advice to asset managers is to have a proactive approach toward this framework, which can improve the cost information disclosure and drive true values. Asset managers should not underestimate the complexity of this initiative. With this, we come to the end of our webinar on Cost Transparency Initiative. We hope that you have gained some valuable knowledge on the matters of cost and charges disclosures. Furthermore, we wish to inform you that acarda will be organizing a workshop in London on the 13th of February. This workshop will be attended by industry experts and policymakers and will be targeted towards providing guidance, strategy, and implementation. Thank you again for your time, and we would like to move towards the Q&A session of this webinar.